What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. And today we're breaking down, we're going to be breaking down both the futures contract and the S&P 500. We'll be looking at SPY and ES continuous contract on TOS, Ameritrade, TD Ameritrade, Schwab, whatever it may be these days. But nonetheless, we'll be looking at the continuous contract and the SPY ETF because guess what? We got rollover coming up, and I have rolled over to the new contract. We are now trading the June contract. For those of you that don't know what that is, basically a little acronym, hummus. It's basically HMUZ. So we've traded the H contract, which is March. Now we are trading the June contract, which is M. And with that comes a little bit of a premium and difference in price action, or not necessarily price action, but price in general. I can show you that real quick just by briefly looking at this is the June contract. It is trading at 52.4150. All right, or at least today's high was 52.4675. And then if we look at the March contract, the March contract is trading at 51.81. Okay, so rollover is happening. So the volume is dropping off, as you can see in the March contract, and rolling over into the June contract, right? So we have a little bit of a premium in price. Nonetheless, the charts are essentially the same. I don't back adjust a whole lot. I do back adjust basically the last 2 weeks. I'll back adjust the price and destination, so that way we have a little bit of kind of whereabouts where we could end up on both the upside and the downside. And today was, kind of a lackluster day. Very positive for the buyers, but nonetheless, we are still in a balance. And we'll discuss that here in just a second. So let's go ahead and look at the larger time frames. I want to look at SPY just so we can kind of understand, because SPY is continuous, right? SPY, the only thing that really happens with SPY that makes price a little bit different is the ETF, but nonetheless, or not the ETF, but the dividend. Nonetheless, the overall context of the market is better seen in SPY ETF just because you don't have contract rollovers, etc. So we have been one time framing up. Like I said, we've been one time framing up in ES for quite some time. We've been one time framing up in SPY for quite some time now. 1, 2, 3, 4 months in a row. We'd like to see continuous extension above the previous month's high, just to show that in the bigger picture, the trend is still strong. So monthly, still one time framing up. The weekly, now this differs from SPY or from the ES. ES has taken out two different occasions, 2 different weeks, have taken out previous week's low and come back into a balance initially, only to go back up in the weekly time frame. SPY has not done that. SPY has continuously one time frame up for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. 9 weeks in a row, SPY has been one time framing up, and you can call it 10 if you'd like, but 9 weeks in a row without a single previous weekly low being taken out. We've gotten near it. We've gotten near a previous weekly low several times now, but never have taken out a previous weekly low. We did the same thing last week. We got really close to the previous week's low, which was 504.75. 504.91 was last week's low. So right now we are approaching the top of that weekly range from the previous week, which is, if we take that out, we continue to one time frame up. However, things did change on the daily. The daily went back to balance. So the daily has been in a balance. I've been calling it I called it a 3-day balance or a 4-day balance whenever we came back into balance on Monday or Tuesday. Monday? One of the two. Either way, we came back into balance. We stayed in a balance, and right now we are approaching a balance high. So whenever it comes to balance rules, you want to keep in mind the 3, right? You get near balance high or low and fade off of it. So you reject it, you push through it, stretch it just a little bit, and then come back into the range, or you push 2 through and away from that balance area. All right. So the SPY is in a balance, right? We don't come out of balance until we take out 518.22. We take out 518.22, the all-time high. We will resume one time framing up on SPY. Now, ES is a little bit of a different story due to the premium and everything with the new contract. So things look a little bit different. However, not much has changed in the bigger picture as far as the monthly goes. And we're going over all this just to kind of give you, or to look at the broader picture, bring in context. That way we know what to, or at least what the bigger picture is trying to do whenever we are looking at the smaller time frames. Kind of helps us gauge what can possibly happen. So just like SPY, we continue to one time frame up 4 months in a row. Nothing changes there. Weekly did change. All right. Last week, we came back into a balance because we did take out the previous week's low by a point or two. We took it out and then came back in, and we attempted to have both an outside week down and an outside week up, and failed miserably at both. However, we closed with a bit of a doji, however you want to look at that. But so far we've taken out, and that's partly due to the premium in the new contract, but we've technically taken out last week's high. So we are one time framing up in the weekly. Okay. One time framing up in the weekly in ES. All right. So ES, SPY, both align on the monthly and the weekly with the one time framing up. Now where things get a little bit different is SPY is still in a balance on the daily time frame, whereas ES is in the futures contract is in one time framing up mode, breaking out of balance to the upside at all-time highs here at 42, 46, 75. So very, very, very positive for the buyers. We still have gaps below that need to be filled. We still have this massive gap here. 20-day moving average continues to creep on up. 50-day moving average continues to creep on up. 200 way down here. Don't expect us to see that anytime soon. So what does this mean for us? Well, it means in the bigger picture, the market is bullish. We are still in a very strong bullish trend. Every pullback that we've had anywhere near the 20-day moving average or remotely close to that 20-day moving average has been bid up. So very positive for buyers, right? Buying has yet to cease. Yes, we've had some choppy sessions in the shorter term, but in the bigger picture, we are one time framing up. Now, like I said, the only thing that is different is between the SPY on the daily time frame. SPY still in a balance, have not taken out that all-time high, balance high, and Q also at all-time highs here. So ES, on the other hand, let me get to it, is one time framing up on the daily. So very positive for the buyers. Now let's go ahead and look at the we'll go ahead and look at both contracts just real quick. I do kind of want to show you both contracts. So this is the March contract. Yes, things are kind of falling off in the sense of volume. If it'll allow me to show you guys, maybe not. But the destinations remain the same. Same where I left you guys off on the March contract. Area of interest that I had at the time was on any upside push was in this area between now keep in mind this is the March contract, but anywhere in between, oh, that's ugly, between 5180 and I believe 5160, right? In between this 20-point range was going to be an area of interest for me. Basically, I wanted to see how we reacted. Initially, when we pushed up into this area, we sold off pretty good. Second time up, basically filled what I would call quote unquote single prints. Not exactly single prints, but we filled that area, but still had trouble getting back up into this area where we did a whole lot of volume. So you can see where we packed in volume here, right around where we had low volume on that massive push down, not massive, but rather quick liquidation here where price just was not accepted. We finally found some acceptance there, right? You can see how we'd spent a lot of time and volume in that area between 5160 and 5180. Now, same thing applies to the June contract, except for the price is just a little bit different. But the premise is the same. Okay, look at how we pushed up into this area initially. Point of interest that I had, right? Not necessarily single prints, but we treated it like such. So initially, first time in there, we had a bit of trouble, rolled over, came down, found some buying above the open, rotated back up higher, went back and attempted to get into the into that upper area where volume is. Now, in the technical sense, according to this chart, we have not taken out the all-time high 52, 57, 25. So that is the next target on the upside. Now, this is back adjusted. So however you want to look at it, whether we're at all-time highs or not, whether we're still in balance or not, however you want to look at it, right? Chart here on the 30-minute time frame shows that we are in a balance. Chart on our daily continuous contract shows that we are one time frame and up. This is where things get really tricky. So because SPY is the most consistent, SPY ETF is the most consistent, we have balanced rules. So same thing apply here on the 30-minute time frame, where we pushed up, got near a balance high so far, and we are struggling a bit in this high volume area. Now, if we look at the support and resistance area that I always like to play with, you can see pushed right through here. All right, I was looking initially to see how we reacted against this area of volume, pushed right through it, right? Had no issue, but we came into, right, because price was accepted here at one point in time, several times. Price was accepted between that 52.23 to 52.09, 5200 to 52.23, essentially. Price was accepted there. We pushed up to an area where there isn't much volume, right? There wasn't much volume in this whole area here, right? From 52.44.25 to 52.27, not a whole lot of volume or price accepted in that area. So first few times we were up here, we had a little bit of trouble, rolled over, found buyers above the open, had an afternoon pullback low, rotated up, went back to pressing towards the highs, closing at the highs for the day, but still struggling above 52.44.25. So going forward tomorrow, that will be kind of what I'm looking to see, how we react above it. We had CPI data that came out a little bit more hot than expected today, but nonetheless didn't really cause much on the downside or really on the upside, in my opinion. The previous day, we had a wide point of control. Look at how beautiful this area of support held, right? We held it a couple times back here. We held it here, created a wide point of control. Volume and price was accumulated here, being distributed up here near the highs. So moving forward, we'd like to essentially see the afternoon pullback low hold, right? So create an area of support here. And none of this is perfect, right? It's just kind of give us an idea of where we might find some buying pressure in an area, and where we might find some selling pressure near the highs. So since today's high of the day, just look at how perfect that area worked out. So once we got towards the highs, it was hard for me to want to get long because I knew where the overhead resistance was. Didn't mean I didn't get long, but also didn't mean I got short because of the overhead resistance, and just meant we need to be more cautious on our buy side. As far as our price action over the last 2 days, like I said, yesterday we had 11 wide point of control, afternoon pullback low. Today we opened with a gap above the previous day's high, came back in, hit that 11 wide point of control to the tick, and then rocketed up, right? We had a little bit of English. We had a little bit of a liquidation, or rather a inventory adjustment to fill the gap, where we found buyers and bids sitting down here around the 51.80 level, right? So we had some nice buy pressure come in around that 51.80 level. We pushed up, one time frame up, held trend for 2 time frames. Attempted, like I said, we were trying to find acceptance in this area where we didn't have much volume or price. So we didn't really know how price was going to be accepted up here the first time around. And clearly it wasn't very accepted, as we did end up rolling over. Now, I did end up getting long around this area. Today I did trade. I didn't trade yesterday. It was a choppy session. And then traded on Friday, made pretty decent on Friday. But today I did trade, took a loss, pretty nasty loss actually, on this pullback here. As I was long around the 20, I want to say, what was it, 28? I think it was 28s. I was long around 28s, looking for us to rotate up, pull up to this 52.44 level. At the time, we were one time framing up. We were holding trend. Value was higher, right? We had things in buyers' favor. We had gotten the initial balance high, so we were holding above the open. There were several things in buyers' favor, so I was confident getting long. However, I was long too many contracts. I got too big too quick. We came in, and as we came in, I added more contracts, and we continued to liquidate lower. And I pretty much stopped out. I was not looking for us to get below A's high. So once we got below A's high at 52.10, I got stopped out of the trade. It pushed down 3 more points and then rotated up, creating an afternoon pullback low. So I got stopped out for a pretty nasty loss. I should have stopped out below C's low at 52.2275. Kept the stop a little bit tighter, but really wasn't expecting more of a liquidation, not liquidation, but wasn't expecting this pullback that we had going into the afternoon. But we did, found buyers above the open, which gave me another opportunity to get long. Because of everything that was still in the buyer's favor, I was comfortable getting long again. So I got long, what was it? I think it was 30 or 40 contracts of MES. I was long. It rotated up, basically made back my money. And then once we popped the high here, 52.2450, we pushed up to 52.27. I got out of all my contracts for basically break even on the day. Ended up just roughly, oh, it's not going to show me anymore, but I ended up just roughly $100 bucks on the day. So went from being down about $1,000 to being up $100, and I really wanted to hold to the day's high, but because of the big swing and drawdown, I was like, you know what? Let's just let the heart rate calm down. Let's not do anything stupid. Let's close it down. So I did. After that trade, I was like, you know what? We made our money back. It is what it is. So closed it down. And sure enough, we did grind up higher, but just as easily as this was an afternoon pullback low, this could have been an afternoon rally high, and this thing could have rolled over, liquidated back towards the lows. But yeah, that was essentially my trading for the day. Failed days at the failed at trend day up again, so not very positive there. Trend days have not really held as strong on the upside. Gaps on the upside have not held very strong. There's only been like 2 upside gaps that have held out of the several days that we've been trading. Trend days not holding as positively as we'd like, but nonetheless, pullbacks are still being bought, and buyers are still taking control of the day when it's all said and done. So let's go ahead and mark our destinations here. And I know that's probably all over the place, but that's just how my brain works. Welcome to ADHD. There's our low of day right here at 51.80. We do have an afternoon pullback low. It's technically not textbook, but it is an afternoon pullback low. So we will use that as a reference, kind of sort of like we did down here with this afternoon pullback low at 51.74. So afternoon pullback low, 52.0750. I literally got stopped out by 3 points, but it is what it is. Afternoon pullback low, not textbook, not something we'll completely lean against, but we definitely want to see buyers step up in this range to keep the move going higher. Then we have today's high day at 52.4675. 52.4675. So now keep in mind, we are in a balance according to SPY. We are one-time firming up according to the continuous contract, and according to the March contract on the 30-minute time frame, we are in a balance. So balance rules will apply going forward. So keep that in mind. Keep your hard hats on. And let's go over our destination. So if tomorrow we open up above 52. Let's just say we open above 52.30. Okay, we open above 52.30 and we hold above 52.30. Okay, that's going to be my line in the sand. 52.30, essentially where we had the point of control today. Not wide one, seven wide point of control. But if we hold above there, we should rotate up, take out today's high, 52.46.75, push up, take out that back adjusted 52.57.25 all-time high, and then we'll be one time framing up on the June contract. SPY should at that point be one time framing up as well. Now on the downside, if we do not hold above 52.30, your downside destination will be 52.0750. If you don't hold there, 51.80 will be your next destination. Then the afternoon pullback low at 51.74, 51.57 low of day. Now these are all back adjusted low of days, so they will not be in line with what we had for the March contracts. 51.24.25 low day from the 5th. Then we have the gap that starts and the low day from 51.12.25, and then that gap gets filled at 50.57.50, 50.37.25 10 wide point of control, 50.18 low of day from the 21st of February. So a lot of downside destinations just given to you right there. The only two upside destinations we have are today's high and the back adjusted high, all-time high and high of day. So once again, just expecting a whole lot of having some issues up here near the high as we are in balance. Okay, so with that being said, ladies and gentlemen, I hope you all have a wonderful day. Thanks for stopping by. If you did enjoy the video, please leave a like down below, especially if you made it this far. Hopefully you enjoyed it. I sure did. We'll catch you guys in the next one. See ya.